Three.
Unless you want to put everything back.
Let's call the meeting to order. If we could all rise for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Good evening, everyone. Let's start off with roll call, please.
You want one of these, Jim?
I'll let you do a roll call then. Who's doing roll call? Do I need to do a roll call?
I can.
I need someone to. Or do I do it myself?
Yeah.
Okay.
Andy Bozak,
Present?
Michelle Harris. Here. Mike Frickner. Red Stone. Jeremy Rivas.
Here.
Greg Sims.
Present.
Andy Vasquez.
Here.
Ed Morales.
Here.
Jim Biggs.
Here.
Barb Bregman. Here.
Can you recall Redstone?
Redstone.
Here. Thank you.
Yeah, sure. All right, next we're looking for the approval of minutes from the foundation of May 27th.
I'm so moved.
We got a second?
Second.
Got a first and second, any discussion? This is about the minute approval. Hearing none, all those in favor signify by saying aye.
Aye.
All those opposed, same sign. Motion carries. Next, we got our Capital Cities presentation. Artisan.
Thanks so much, Andy. Can everyone hear me okay?
Is your mic on? There you go.
No, now, perfect. My name's John Williams. I think it's probably been 2 or 3 years since I've been up here to see you guys, so thanks so much for your time this evening. I'm a consultant at Capital Cities. Amanda and Corey, who you normally see, we're dividing the content with client meetings. If everyone could just go behind the first page in your booklet, our considerations and observations for tonight. A few items that you see there. The first one, the investment policy statement. Just as a reminder, as co-fiduciaries of these assets, we review the investment policy statement on an annual basis. That's contained behind tab 2 if you have physical copies. So a red line version, and then in the very back pocket, there's a clean version. We've updated all the items contained within the appendix, more housekeeping type items, market values, investment manager lineup. We just want the policy to be up to date. Should anyone come to you and ask, what's the policy that governs these assets? We've got all the items right there in the appendix. The other item you see there, the distribution analysis, as a follow-up to the portfolio construction meeting, the last quarter, we prepared a distribution analysis to take a look at what real total assets might look like with a one-time 5% spend in calendar year 2026, 3.25% thereafter, and then also if we change the spending policy to 5% permanently into perpetuity. So that's behind tab 1, and I'll cover that after I go through the performance report. Then the last item there, if you remember from the last meeting, there was a recommendation to replace the Wasatch Ultra Growth Fund. We replaced that fund with Congress Small Cap Growth. Those trades took place on May 28th, and you'll see Congress reflected here in this booklet. Do you have any questions on any of that? I'm going to briefly cover the markets in the second quarter. That's what you see there on page 2. There's a ton of information. There's some commentary at the top. I'm going to focus most of my comments on the middle, the chart in the middle left-hand side of the page. That's the equity markets, and then the fixed income markets down there at the bottom of the page. Really, the theme for the second quarter of 2025 was absolutely a very risk-on sentiment in the investment markets. Momentum absolutely drove returns, specifically in the months of May and June. However, right at the beginning of the second quarter in April, we saw Liberation Day sweeping tariffs instituted across the board. The S&P 500 actually declined 10% intra-month. Those fears were a little bit abated when the administration came out and announced a 90-day pause across the board. You combine that with very strong economic metrics in the month of April and May, strong retail sales, low inflation, a renewed optimism for artificial intelligence, and then at the time, a possibility for a rate cut in July. All of that led to very strong returns in the months of May and June. And not only did the S&P 500 erase a negative 10% decline, it actually finished the quarter up 10.9%. So if you're looking at the bar...
Could you click that message that's not in the middle of the screen? For Joy. Can someone click that? I don't know who's got control.
Hold on a second.
Sorry, I didn't mean to stop you. I know we're in a rush. Thank you.
what I'm saying.
Okay, sorry, I didn't see that.
If you look at the bar charts there at the center of the page, the S&P 500 up 10.9%, that's represented by the large cap core there on the far left-hand side. The stocks that drove that index were large cap growth stocks. So if you look at 3 columns from the left, large cap growth up 17.8% in the second quarter. That's where you see those magnificent 7 names reside: Apple, Amazon, Google, NVIDIA, all finished positively in the second quarter and very much drove the investment markets. I also want to point out the very far right-hand side of that bar chart, both international developed and emerging markets, both up around 12% for the quarter. International markets were very much beneficiaries of some tariff policy uncertainty right at the beginning of the quarter. They received inflows from investors that were taking their dollars out of the U.S. stock market. Transitioning to fixed income real quick at the bottom of the page, you look at the return profile there, disregarding the 3 columns on the far right, I would say it's a very much a normal fixed income market environment in the second quarter. The aggregate, which is 3 columns from the left, up 1.2%. That's the broad proxy for U.S. fixed income. Investment-grade credit, corporate bonds up 1.8%, really reflecting the demand for yield and a risk-on sentiment in the second quarter. On the far right-hand side, the best place to be was high yield. We saw spreads tighten at the end of the second quarter. And then non-dollar and emerging market bonds, very positive. Non-dollar was up 7.4%. Really ties back to the theme of investor dollars flowing to bonds overseas. I think the big story right now, just in the broader markets, is very specific to fixed income. In the second quarter, the Fed held interest rates constant at 4.25 to 4.5%. There was some anticipation that we might see a rate cut in July. They elected to stay steady in the July meeting. If you watch any market news, you probably saw Fed Chair Powell's speech at Jackson Hole last week. He very much indicated that a 25 basis point cut is on the horizon. I looked at the futures market this morning. The market's predicting an 84% chance that we'll see a rate cut, so it's kind of baked into valuations as you see them today, but we would expect a little bit of a bump in both equity and fixed income. As you all know, Fed Chair Powell, he's really been balancing inflation coming down in July at 2.7%, and then on the flip side, how does the job growth look like in the U.S. economy? We saw some job revisions for the months of May and June to the tune of around 250,000. I think that kind of paves the way for him to institute monetary policy easing at the next meeting. But all signs point toward a 25 basis point cut. That was long-winded summary of the markets. Any questions on that before I jump into your portfolio performance? I'm actually going to go for, maybe first, really quick on page 3. I think this is interesting. The S&P 500 sector returns there at the bottom left-hand corner. Not surprising, information technology very much so driving the market up 23.7%. Again, those Mag 7 names, Apple, Amazon, NVIDIA, are really residing in that information technology sector. If you go forward to page 6, this is our portfolio summary for Porter County. You can see the market value in blue there, the left-hand side of the page, $196,204,000 and some change. The performance figures are represented there at the bottom left-hand corner of the page. For the quarter, the portfolio is up 5%. Year to date, the portfolio is up 6.5%, and then over the trailing 12 months, up 9.7%. Very strong absolute returns out of this portfolio, specifically over the last 1-year period of 9.7%. If we compare that to the evaluation benchmark, which is a broad market proxy of indices of the underlying managers, we did see some slight underperformance for the quarter. A lot of that is attributable to your active equity managers. So if you look at the top right-hand corner of the page, see that diversifying equity bar, 32% of the portfolio. Those are managers in the portfolio that have someone at the helm picking which stocks to go into an underlying fund. Your active equity managers are very much structured for downside protection. That's why you saw last quarter when the markets were negative, your portfolio was actually positive. Those underlying active equity managers just lag the momentum-led tech market. One of your managers is holding underlying stocks at a 1.5% weight. Apple and Microsoft are both above 6% in the index. So not surprising to see some underperformance in the quarter, but again, our focus is to ride the momentum, but also more focus on downside protection and keep out volatility. And then similar story, I do want to touch on the last 1-year period. Very much that same theme, but a lot of what's driving that underperformance over the last 1-year period is the Wasatch Ultra Growth Fund, the fund we had on watch list status and then terminated at the last meeting due to some challenging underperformance there. Your asset allocation was directly in line with the ranges that are outlined in the investment policy statement. That's what you see there at the bottom right. Any questions on this page before I go forward? Page 7, a brief update on our underlying manager stoplights. If you cleaned up a little bit from last quarter, you don't see a bunch of red dots on the page for the Loss Acquisition Growth Fund. We still are monitoring one manager, the AQR Large Cap Defensive Fund. Again, this fund, you probably heard us discuss this before, maximum allocation to stocks at 1.5%. It's just not, it doesn't have the concentration of the broader market. Since inception of your portfolio on an average annual basis, this fund has generated more than a 9% return. This was one of your best performers last quarter. It was outperforming by 8% when the market was down. We also sourced this fund because of the way it held up in the first quarter of 2025, when we distributed the dollars in February for the annual distribution. We absolutely think this adds diversification for your portfolio. We do just have to monitor it and let you know about it because of the guidelines that are outlined in your investment policy statement. Any questions on page 7? I do want to just briefly touch on page 8, because it'll tie in a little bit to my next presentation. If you look at the very far, this is on the top, various period returns, calendar year returns at the bottom. If you look at the very far right, since inception, this portfolio dating back to March of 2016, the average annual return has been 6.9%. Showing some alpha relative to the benchmark and beating that performance target. But this will tie in well when I talk about what we can expect this portfolio to earn on a go-forward basis in the future. Does anyone have any questions on performance? That was all my prepared remarks that I wanted to hit on. Could we maybe switch gears to the other presentation?
There's no screen here, so he's winging it.
You don't have a screen?
Well, it's black and stuff like that. Computers.
Yeah, that's 2 years old. Why don't you have a new one by now?
For those of you with hard copies, thank you so much. For those of you with hard copies, this is behind tab 1. I mentioned this a few moments ago, but if you go behind the first page there to page 2, as a follow-up to the portfolio construction meeting, we want to take a look at the underlying spending policy, what the impact might be if we did a 5% distribution in 2026, and then if we permanently change the spending policy on a go-forward basis to 5% per year. There's some background and key events of how the spending policy has evolved since its inception. But the 2 items that I'm going to touch on are down there at the very bottom of the page. We're going to take a look at real total assets and then also real spending out of the portfolio. Page 3, you've seen this chart before you saw it last quarter. This is just a brief reminder on an average annual basis, and it's 3 rows up from the bottom there. Your portfolio is expected to earn 6.56% based on the underlying asset allocation, equity to fixed income, and cash. We bring that full circle on page 4 and show you how your portfolio ties out to the current spending plus a very long-term forward-looking 10-year inflation figure of 2.5%. 6.56%, you compare that to 3.25 spending, 2.5 inflation, 6.6% is greater than 5.75%. The way your spending is constructed today, you're absolutely expected to preserve purchasing power in the future and experience real growth of these assets. I feel like page 4 is important because I'm going to reference it in my next few slides. Page 5, this directly addresses the questions that we were asked to bring from the last meeting. There's a lot of information on this page. I just want to explain what you're looking at. We're showing you the impact of various distribution scenarios with a median market environment over the next 50-year period down at the bottom of the page. We can run with our software around 1,000 Monte Carlo simulations. This is the median, not the average, but the median market environment that we could expect over the next 50 years. You can see there's 3 lines on the page. The blue is your current spending policy, 3.25% into perpetuity, so starting with a value of around $200 million where we are today. You can see Over 50 years, you could expect your portfolio to have real growth, so this is adjusted for inflation, it's important to know, of $292 million would be your ending value in terms of total assets. Not surprising, the gray, if we did a one-time 5% distribution, that would lower the total assets, kind of where we're starting in calendar year 2026. We'd end with around $288 million in terms of real total assets. The orange, 5% spending on an average annual basis would erode the purchasing power that we have out of this portfolio. Over 50 years, we have around $119 million, and kind of ties back to the equation I showed you on page 4. We're earning 6.6%, spending and expenses are 5%, inflation is 2.5%, 6.6 is less than 7.5. So that's why you see an erosion of purchasing power if we did do 5% in perpetuity. A little bit further on page 6, this just shows our projected future total spending, also adjusted for inflation. So a similar way to look at the chart I just showed you on the page before. It's the same 3 scenarios. If we did, I think the 2 most important lines are to look at the gray and the orange. So if we did a one-time spend, you can see we would spend 5% in 2026, that's the first year there at the top left, and 3.5% thereafter. In the 50th year, you could expect around $8.6 million to be your average annual distribution. If we did the orange, we would see an erosion of the real total spending over 50 years to 5.8%. Not surprising given what I showed you the page before, how real total assets are also declining. So you have a smaller base that you're starting from in general. Our goal with this is to provide you with the analysis. Obviously happy to answer any questions that you have. We understand that there are budget needs in the county, but it's just our job to bring you what the impact would be from an investment portfolio perspective.
Yeah, we appreciate it. That's exactly what we were looking for and asked for. Did you guys have any questions about that?
I do.
Councilman?
I have a question. I don't see any real drop in that, in the 5% perpetuity until about 2030. Is that correct? If I'm looking at this right?
Correct.
Okay, so 2028, looks like it went up until that point in 2028 before it starts to decline. Is that correct?
Are you looking at page 5?
I'm looking at page 6.
Oh, page 6, I'm sorry. Yes, you're correct.
Okay.
Yep.
Thank you, that's all I was curious about.
We have further questions?
I do have a question. Why is it representing that from a withdrawal, an absolute dollar withdrawal, and when you go back and you look at the value of the portfolio, it shows it going down immediately? I don't understand why that is different.
That's a good question.
Graph should look the same, shouldn't it?
It's a great question. It's because we are applying the smoothing mechanism for this. So you're spending, we kept the same spending smoothing in this analysis, so it's an average quarterly market value for 5 years. So that's why you see at the beginning still holding on to some of those previous market values to get that annual spend, whereas the real total
So in
dollars.
actuality, you're taking out more than you really should be because of the smoothing. The smoothing is not reflecting the fact that you've taken out more money. It's still,
The smoothing would still reflect that you're taking out more money.
but only the one time. It's not reflecting that you've taken it out. So it's looking backwards, it's not looking forwards. I'm sorry, that's a mathematical thing.
No, we do upload historical data into this. So like for the first year, it's looking at the trailing 5-year average quarterly market values to get that first time annual spend. And then for the next one, because the previous values historically are, elevated, that's why you don't see the line decreasing as much as the real total assets does on the page before.
Let's say, just as an example, we were to take out $100 million,
Yep.
and you did the smoothing, it would still reflect the other quarters, and you would be taking out more money, and it would reflect the fact that you took that big.
Correct. Yep.
That's what I'm talking about.
Yep.
And can I just, in terms of the philosophy of a foundation, what is the purpose of a foundation? Just in general, the structure of a foundation.
To support the needs of the community.
but just any foundation in general.
I guess that's how you want to create it, correct? I mean, if
Yeah.
you want to create a foundation that's going to last 10 years, you can do it. If you want
I
to...
mean, the foundation was created on the sale of a hospital, which in my opinion is, this is the people's money of Porter County. Whether we spend it on ambulance service, districts, whether we spend for the good of the county, that's what this foundation's for, in my opinion.
I'm just talking about the foundation as a vehicle. So if you're creating a foundation, really the intention is for that to go into perpetuity, correct? And if it's something that you want to take big chunks out of money, or you want to take more money out so it can't go into perpetuity, the foundation as a structure might not be the proper structure for what you're attempting to accomplish.
I would say that's accurate. Yes.
So in that scenario, what would be, in your opinion, a more appropriate?
Venue for this.
Yeah.
But I feel like, I don't know if it's necessarily my place to answer that question, honestly.
Well, I'll tell you, going forward, we might be looking at actually pulling money from the foundation, which is going to require a final vote, because it's hard to, you know, in 2028, we have some scenarios where we're going to be possibly receiving some money, and if we're doing some calculations, and it's either raise taxes to get to 2028 or pull out money out of the foundation, so that's what's...
Are you talking about 5%, or are you talking about...
We're talking possibly, it could be possibly a small chunk to get to 2028.
I haven't heard any of that. Okay.
Well, we're thinking of every single scenario to where we're looking at not raising taxes on a taxpayer.
But I don't think that's every scenario. I don't think.
I think there's a lot of, we're looking at a lot of scenarios.
Yeah, I don't think there's only two.
Well, also, is there a possibility of doing a loan,
That's,
another scenario?
yeah, absolutely. So, I just figured, I know it's a council's fiduciary budget, but the foundation might have some considerations as well to think about.
I think those questions do feed well into the investment policy statement, so that's part of the materials for the meeting. Talks about the mission, and then the Indiana code that was created in Condition E.
All right. Any other questions about the 3.5, 3.25 to 5? Or do you want to continue? Do you have anything more, or we...
The only other item that I had was behind tab 2 in your materials. Again, nothing in terms of an amendment or an update to the body of the investment policy statement. It's just items contained within the appendix, updating rosters, updating market values, updating forward-looking expected returns. Nothing really to cover. It's just if anyone wanted an up-to-date copy of your policy, you have that handy to give them.
Does anyone have any further questions for John before we move on to new business? Okay. Thank you very much for your time. Next up, we got new business, Cat, Sapper, and Miller, final 2024 audit report. I assume we need a motion to accept? Have you guys all had a chance to review it? From what I read, it sounded pretty good. Nothing in good shape. Anything to point out to us, Harold, Scott, anything? No? Good? Everything looks good. Got a first, can I get a second?
Second.
Good. Is this a roll call vote? Or does it matter? Voice vote? Voice vote? Okay. Okay, we've got a first and second. Any discussion about the Cat, Sapper, and Miller reports? Hearing none, I will accept the motion. All those in favor, please signify by saying aye.
Aye.
All those opposed, same sign. Motion carries. Next, we go to the attorney's report.
I have nothing.
Next, the approval of claims. This is any other matter that may come before the board. Approval of claims, Capital Cities, Quarter 1, for $16,250. Do I hear a motion?
So moved.
Motion, do we have a second?
Second.
A motion, second, any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
All those opposed, same sign. Motion carries. Next, we got the Cat, Sapper, and Miller report that they just completed. It's $5,250. Can I get a motion?
So moved.
Got a motion, do we got a second?
Second.
Got a motion and a second, any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
All those opposed, same sign. Motion carries. Okay, anyone from the public want to speak? Anyone have anything else? Members of the board, nothing? Looking for a meeting to adjourn, or a motion to adjourn.
Make motion to adjourn?
Second.
Second, any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
All those opposed, same sign. Motion carries. You guys have a good evening.